On the weekly time frame, what you do is to look for a trading range. You look for a trading range, guys. You look for a trading range. When I mean trading range, just get the most recent break of structure, either to the upside or to the downside. You mark out the high and the low. That is all you do on the weekly time frame. Then you proceed to the daily time frame. Here on the daily time frame, guys, what you do is you look for your bias, daily bias. That is the most current trend of the market. It could be bullish, it could be bearish, depending on the context. But what you do is this: you look for what at least two most recent break of structure to one direction. That tells you the trend of the market. Either it is bullish or it is what bearish, guys. All right, you look for what two most recent break of structure to the upside, guys. Two most recent break of structure to the upside. That's what you do on the daily time frame. Then on the 4-hour time frame, guys, on the 4-hour time frame, see what you do, guys. You look for your what store. I like to use the word store so it looks very, it sounds very real to you, because you have to take trading as something that is real. You treat it like business. All right, so why I say you look for what your store is, it's like your point of interest. All right, those are the area you want to wait for price. Now price coming to your store is simply what customer coming to your store. All right, once the customer get to your store, what you do is you negotiate with the customer and you know if what the price align with the goods. All right, so after negotiation, then business will be what done. Okay, so the store are like your fair value gap, your order blocks, your breaker block. I think these are point of interest, but I prioritize my order block and breaker block. All right, I prioritize order block and breaker block. I use fair value gap as a confluence. I don't just use it as a point of interest, but as a confluence. So there are people that uses fair value gap as what as a point of interest. All right, but I don't do that. Just as a confluence. So I look at what order block and breaker block. So on the 4-hour, I mark out my order block and breaker block, and this order block must align with the daily bias. All right, if the daily is bullish, and then I know that my bias is bullish, the trend, the most recent trend is bullish. So what I'm going to do in the 4-hour is to look for what a bullish 4-hour order block or a bullish 4-hour breaker block. All right, I outline those areas. Those places becomes what my store, and then I wait. Waiting is a virtue in this game, guys. I wait for price to come to that area, guys. Okay, so once price come to either, let's say, my breaker block or order block, depending anyone, let's just use block order block for example, and then once price comes to my order block and tap my order block, the next thing I do is to go to what 15 minutes time frame. 15 minutes time frame, this is it here. 15 minutes time frame is just for what confirmation and entry. That's all. You don't need to make your chart look so so confusing. 15 minutes is just what for confirmation and for what entry. So what I do on 15 minutes is when price comes to my store, that is, I have a customer now that just came to my store. What I do is that in that 15 minutes time frame, I want to look at two things, and these two things is what liquidity sweep. All right, remember guys, liquidity is always available in every old highs and old lows. All right, you find liquidity. Liquidity is simply what money. All right, so liquidity sweep simply means money sweep. I want a certain amount of money that is in the old highs or old low to be swept. All right, that is what I want to see in 15 minutes time frame, and this liquidity must be swept right in my point of interest, guys. In my point of interest, either inside the order block. All right, once I see the 15 minutes sweep of liquidity, the second thing I look out for is what a change of character, guys. A change of character. So once I see a change of character, I don't hesitate. Once I see a change of character that broke with the full candle body, do you know what I do? I take trade from the what order block of that change of character, and that order block, for an order block to be valid, you guys know that it must break structure, all right, and then has what a fair value gap. That is a displacement. Okay, so once I see that change of character, The next thing is entry. I'm entering on that other block that caused that change of character, and then my stop loss is below the other block, and then I target what 1:3, and then I'm out of the game. It's as simple as that. I know a lot of people that are into trading would understand the terms and the terminology I'm using right now, and then for newbie, they may not really understand, but I'll keep saying it, and then I'll keep showing you proof, and with chat little by little, you guys will understand how to trade like a pro. Thank you very much for watching to this end. I love you.